If you trade the ES futures, you definitely need to start implementing this risk management strategy for your stop losses. Guys, my name is D. Anthony with evolutiontraders.com. I'm a full-time options as well as futures prop firm trader, as well as educational trading coach. If you guys want to join Evolution Traders, the price is half off. So if you've been thinking about it, take advantage because I only have one space left to join the room before 2024. So with this strategy, what you're going to be using here, again, we're using the Thinkorswim platform. I do all of my charting here because it's where I trade my options. I execute on TraderVate or I execute on NinjaTrader for my futures trading. So again, all I have on this chart is the 20 SMA. You guys already know that I love using the 20 period moving average on a 5-minute time frame for my scalps intraday. And then all I'm going to add here is this ATR trailing stop indicator, okay? My settings are very, very simple. It's the standard settings that when you put this on your chart, it comes with. The ATR period is 5, the ATR factor is 3.5, and the average type is Wilders. The only thing I changed was the width of these lines to 3 so they can be a lot more clear. And the only thing I did was make my lines white. I have a problem with my charts. I like them color coordinated. I just like everything. I'm very OCD when it comes to having a clean chart. When I'm looking at a clean chart like this, I just want everything clean, one color. I don't need two colors showing me different. I know how to trade the ATR. So what we're going to look at here is this particular risk management strategy on Friday's price action would have netted you 5 to 6 R's on your trade setup if you would have implemented it correctly. Now, again, that doesn't mean that you couldn't have taken profits at 1-to-1 or a 2R or a 3R or a 4R. But what I'm saying is the max potential that this trade outputted was 6 R's. The most that we were going to risk on this trade was going to be 10 points on the ES. So again, some of you may be thinking, well, I only risk 3 points on the ES. I only risk 5 points on the ES. I only like to risk 7 points on the ES. I don't care what you like to risk. The risk has nothing to do with it has nothing to do other than how many contracts you're willing to trade in that given profile if it was to lose. So what that means is if in this particular setup, we had to risk at least 10 points, how many contracts can we trade that if we lose 10 points, we're not going to completely rip every single strand of hair off our head at, or we're not going to want to stop out prematurely because we're in a little bit of drawdown. So how many contracts is it? Is it one contract? Is it one mini? Is it 2 micros? Is it 5 micros? Is it 10 micros? Is it 6 micros? Whatever that is for you, you have to identify that. There is no cookie cutter exact number of contracts that you should be trading based on, any particular strategy. It comes down to how much risk do you have to lose? So if you're on a prop firm and let's say you're on a $2,000 drawdown limit, then you can't go out there and trade 10 points and give up 10 points and trade 10 contracts on the mini side of things. You got to tone it down a little bit, right? I mean, let's have some common sense. So on this particular trade setup, how we would maximize and take 2, 3, 4, 5, even 6 R's is going to work as follows. If we are trading below, okay, so if we are trading below this ATR trailing stop indicator and we get a long setup, we have to ignore it, right? Again, remember, all indicators are lagging indicators. However, because of the fact that all indicators like moving averages or this ATR setup or anything, Bollinger Bands, anything, it doesn't really matter what you're using, RSI, this, that, and the other. Everything is trailing, so everything is a little bit lagging. What it does in turn is it also kind of prevents you from jumping in too prematurely, because a lot of times we'll get these setups based on your strategy or based on your edge. You'll take the setup and then you're sitting in 5-10 minutes worth of drawdown, and then you really don't know if the trend has truly changed. Is it on your side? You tend to stop out. You look back at the charts 30 minutes later and the chart is going in your favor, right? But you're already prematurely stopped out. So even though that the indicator is a little bit of a lagging indicator, what I'm noticing on this ATR trailing stop indicator, since I've been kind of testing it and using it, it's lagging around anywhere between 5 to 15 minutes behind price action, which is okay. I'm willing to give up 5 to 15 minutes worth of price action, worth of candles, which is about 3 candles on a 5-minute time frame, or 12 candles on a 2-minute, or 15 candles on a 1-minute. I'm willing to give that up to kind of better serve me in a way where I can almost trust the strategy more, because the price action is proving that the trend is actually changed. So what that means is, for example, a lot of you guys who follow me know that I use this 20 SMA to take entries and for longs and shorts when we're trading below the 20 period moving average and then we close above it. If we confirm it, I like to go long. If we are trading above the moving average and we trade below it and then we confirm that, I like to go short. This is going to actually force us to be a tad more patient. So notice how we close over the 20 period moving average here at 6:25 in the morning Pacific Standard Time, and we do confirm it, but then yet pull back, right? Notice how we do reclaim the 20 period moving average at 6:35, and we confirm it and actually start pushing up higher here at 6:40. However, our indicator is still above our price action. So we can't take this long because we're not looking to use this indicator as a take profit zone. We're looking to use this indicator as a trailing stop. So if this indicator is above our price action and above our entry, then how do we know where our stop is at? We're going to have to actually wait another 5-10 minutes for this to drop down and shift and show us that now it is below our entry price and now giving us that trailing stop. Versus in this particular situation, we would have been looking for a short setup and then using this indicator as a stop loss. Does that make sense? So again, don't make it harder than what it is. Don't make this rocket science. But if you notice here at 650, where we really start to break above this indicator and we're already over this 20 SMA, notice how at 645, the indicator goes from being above our price action to immediately dropping below. This is telling us that the trend has shifted. What's also telling us that the trend has shifted is now that we are over the 20 period moving average and we have confirmed it. So now that the trailing stop has dropped below our price action, we can actually use it as a stop loss. So if our entry is going to be here at 650 when it drops below, notice our entry price is going to be somewhere around 45.72. And notice that ATR at that given time is sitting between 62 and 60. So either a 10 or 12 point stop loss. So we're giving up 10 to 12 points on this potential trade if we close below this ATR. However, as long as we are trading over it and as long as we are still power trending over this 20 SMA, we can, have a better confluence to hold the trade to the long side. And as price action starts to rise, you'll notice that it does go sideways for a little bit, but then starts to trail the price action. So if we're giving up 10 to 12 points, then every 10 points that the ES gains is a 1R return on that investment. So let's just play this along here. From 72 all the way up to 82 is right here. This is your 1-to-1. From 82 to 92 is your 2R, which is here at 840. From 92 to 102 or 602 is here, and that's your 3R. And then we push all the way up here to 07 at our high price. And that's your 4R trade, guys, with still more time left in the day where, yes, it does kind of pull back to this rising ATR. But again, you could have potentially taken out 4 or 5 Rs depending on, what your size was, this, that, and the other. If you're risking 10 points, think about the math, guys. It's very, very simple. You were risking 10 points on this trade and it went from 45.72 all the way up to 46.07. So 82, 92, 102. It's over 37 points, guys, that you could have taken out of this market. So it's around a 4R trade. I got to correct myself. I said 5 to 6 Rs at the beginning of the video. It's a 4R trade, which is still a fantastic move on the ES. So even if you were trading one micro contract, you would have made some really, really good money and very, very low stress of an environment because everything that you need is on your chart. It's telling you your entry if you're using the 20 SMA strategy. It's giving you your trailing stop. It actually makes you be patient for around 10 minutes after it confirms, just to kind of prove to the chart, allow these indicators to catch up and show you that, hey, yes, you're on the right side of the move. Yes, when you do go into this drawdown, you do go into this pullback, it does get scary. It does make the blood start to pump a little faster. But again, if you don't trust your strategy and you don't trust your trading plan in your system, how are you ever going to truly be profitable? Because if you're never truly trusting your strategy and your edge and your plan, then that's going to be changing every 5 trades, every 10 trades. You're going to look to tinker something. You're going to change the indicator. You're going to change the edge. You're going to change your number of contracts that you're trading. You're going to change the setup that you're taking, right? You have to work day trading in a series of trades, 20 trades, 40 trades. And after those series play through, you need to then go through and analyze your P&L, analyze the wins and losses, and see what can you do a little bit better. Can you add a little bit more size to make more money? Because remember, guys, in trading, if we want to make more money, we don't necessarily have to spend any more time on the charts. We don't have to do necessarily any more work. All we need to do is increase our position size when you're ready. So let's say, for example, you're playing 1 or 2 micro contracts and you're averaging, $100 or $200 a day. Well, if you want to make $300 or $400 a day, all we have to do is double our position size. But you can only do that when you're emotionally ready to handle those losses, because when you do double your position size, you're also going to double your losses. So even though it feels good to kind of make 300 to 400, it's not going to feel as good when you're losing 300 to 400 if you're not emotionally ready for that. So again, if you were following this strategy and you're using this simple method, you would have had 1 trade on Friday on the ES that could have netted you 3 to 4 R on your return on your investment. Risking 10 points, you would have made anywhere between 30 and 40 points on this potential trade. And again, are you ever going to catch the whole move? Of course not, right? You're not going to top tick these things. You're not going to bottom tick these things. But again, what I'm trying to show you is that even if you're a 1-to-1 trader and that's built into your trading plan, this trade would have went for a 1-to-1. Right? If you're a 2R trader, meaning you're looking to risk 1 to make 2, you would have hit that very easily, which means that even on your next losing trade, you would have to lose 2 trades in a row to kind of scratch out, right? So when you hit another 2R trade, you're basically back in the net positive 1R again. So that's how you have to kind of look at trading. You have to look at it as, what are you risking? What's your return to investment, your return on investment, and how well, right? How well are you implementing your trading plan? Again, guys, the most important thing I can tell you is stop deviating from your trading plan. You're going to have cold streaks. You're going to have losing streaks. You're going to lose 2, 3, 4 trades in a row sometimes. However, you have to work through that and you have to be sized accordingly to be able to manage that. Guys, right now, I want you to do some simple math and I want you guys to write something down. If you were to lose 5 trades in a row, would it blow your account? If you were to lose 10 trades in a row, would it blow your account? If you're on a prop firm, you're trading for a firm, you're trading an evaluation and or you're funded. If you were to lose 10 trades in a row, would you lose your account? If the answer is yes, you need to size down. Okay, you need to size down. As much as you may not want to hear it, you need to size down. If you cannot take 10 trades in a row and lose them all, you are sized too heavily. Because in all reality, the odds and just the simple pure probability of you losing 10 trades in a row is almost next to nothing. You are probably not going to lose 10 trades in a row. So what the point I'm trying to make is if you can withstand losing 10 trades in a row, and even if you hit at a 30 or 40 or 50% win rate, you're not going to lose your account and you're still going to be in the game for better days to come. So it's not about how much can you make on this one particular trade or this one particular day or week. It's what can we do over the next month? What can we do over the next quarter? Guys, if you need help working on a trading plan, working on your risk management and learning how to accept losses and learning how to accept respecting and trusting your trading strategy, join Evolution Traders. We can work on this one-on-one. You can be a part of the community. You can watch the live streams. We can trade live together. I will work with you one-on-one via phone call, via Zoom, via Discord, however you want to do it. You can get access to all my watch list. You can get access to the community. You can get access to all my video lessons, which is over 25 hours of content outlining and detailing my whole entire entire strategy system. Right now it is half price for the next trader who decides to join. Okay, the next trader. I opened it up this weekend, going into the weekend with 3 spaces available. 2 traders have already jumped on board. I have 1 space available at half price before the year is over. And once that space gets filled, the price is going to go back to normal pricing. I'll see that next person on the inside, and let's get to work.